so many companies, they raise thousands of hundreds of millions via ICO, and there is no any issue. Or for example, companies like Revolut or even Square started to accept payments via crypto. From other side, we see that when you are trying to send your money from crypto exchanges to some current accounts in some traditional banks, seems like traditional banks hate crypto, and they're frozen these accounts or closing, or and my first question is about, is it a real problem? Does this problem really exist, or there is nothing, there is no any issue with sending fiat money from crypto exchanges to some current accounts in your bank? Or this problem really exists, and everyone knows about this problem, but nobody wants to talk about, especially from the stage or via media. So who want to?
Well, I'll address it first. It is a real problem, at least in the United States. At this point in time, there's a lot of fear-mongering going on, strictly because this space lent itself to individuals who wanted to take advantage of people who thought that they were getting into a good investment. A good example is Oreo out of Oklahoma. A lot of people haven't heard of it, but the CEO raised $20 million, had investment professionals working for him, ended up taking $20 million, shutting down his website, and not corresponding with any of his investment professionals. Now, this is an easy target for the United States because they simply want to protect their traditional way of doing business. Nobody at the big firms, Morgan Stanley, whether it's whoever it might be, until they adopt this and they start their own funds and start to profit off of their own, really, the tools and products, it's going to be an issue if you're not transparent. At this point in time, SEC regulation and FINRA mandates you need to go through an SEC attorney so that you have a viable organization, and to every investor, you display and really show every point of the SEC code and how you're following it. The other aspect that you're having an issue with in the US banking-wise is people opening individual accounts to trade cryptocurrency on a massive scale. You see tremendous amounts of banks shutting down accounts, whether it's Citibank, as you discussed, other major banks that have shied away from it. But this isn't widespread in every bank in the US. For example, I'm the managing partner at Block Trade Investments. We're anchored in Wells Fargo as well as E-Trade and Interactive Brokers. So these institutions are willing to work with you, but you have to give them the time to run it up their flagpole, as they have a myriad of regulation risks and issues that they have to work through, and we have to be understanding of that. And I feel like as a community, we have really jumped the gun when it comes to everyone can forget regulation, we're making money, so we're good to go. And unfortunately, that's just not the case.
Yep. I want to add, because there's something I noticed from speaking here today, and I agree with Zach, there are ways to bank and to do the transfer, but especially if you're a good company, so there are people that can do that. And what I realized today, there's a big gap between the big investors. So one of our clients, so just what we do is, in a nutshell, we help clients buy, transport, and store physical precious metals, very old school industry. And we start helping clients convert gold to crypto and crypto to gold. And what we realize, if you have 10,000 Bitcoins, for instance, you don't need anyone. You can open a trust structure somewhere, go to one jurisdiction, employ a couple of lawyers and a couple of companies, and you have that setup that will allow you to liquidify your holdings. The problem is, and what we hear today from people is smaller, smaller investors, even $200,000. You have 20 Bitcoins, you have 30 Bitcoins. These clients, they get stuck, actually. So they made an investment, as Zaki said, they made an investment. Now they want to cash out. They can't. Now there's even a problem to cash in with some of the exchanges. And we saw even from our experience, so when we started to link the gold to crypto to allow purchases and go both ways, we went to the banks. And what happens, bank after bank, and we bank globally with few banks, they said, no, we're not going to do that. And the one time we wired money, we did a $1 million trade, we bought crypto for our clients instead of gold. 2 days later, we got a letter from the bank, we cannot support your business anymore, right? And that's the problem here. And what becomes the problem is that it becomes like there are specialists that their business is hunting, hunting banks for you. So you pay $10,000, $15,000, $20,000, and to pay someone to open bank account for you. And again, as Zaki says, as a community, if we talk about how we want more people to use cryptocurrency, we want the use of blockchain to be more common, that's a main issue that needs to be addressed. And I'm sure it will be addressed. I was asked before, how long will it take? I said, maybe a couple of years. In the meantime, yeah, physical gold is one way of solving the problem. There are other solutions, but in 1 or 2 years, something will have to change. Otherwise, this will never gain any traction in the mass market.
I think I want to add on that KYC and AML in traditional banking, right? If you have ever worked in a bank before, you probably realize compliance department, they are kind of like gatekeeper for the bank. So they have been very familiar with traditional banking products and all that. And even for myself to learn about blockchain and all that, it was a learning curve for me. Relatively tech savvy compared to most people in my industry. So if we expect compliance department in a bank to really learn as fast as what we wanted to run as fast as the crypto community, I think it's not very realistic. And more importantly, I want to encourage the community in the blockchain to come up with more solutions to help banks, financial services companies to do KYC, AML, and all that kind of procedures and checks. Last October, I think OCBC, HSBC, and MUFG, they came out with a consortium to try to come up with KYC procedures on the blockchain. Now, these are initiatives that came out from the banks. And we would love to see more of these solutions coming out from the blockchain community to help them to help the blockchain community. I think that is a more concrete steps instead of saying that the banks not too friendly. Banks have their own set of problems. They have pile of workload in the traditional BAU business. Now with this high growth industry in blockchain and cryptocurrency related, that really created a lot of difficulty for them, especially for a 40, 50-year-old compliance officer working in a bank for 30 years. That is a steep learning curve. So I implore everybody to think on the other side as well.
Or bypass, or try to bypass, right?
Well, and I think that's a very good point. The one aspect that I've always encouraged individuals, at least in our community, to do is to reach out to banks and start this dialogue. I think everyone on the stage, as well as out in the audience, can anyone raise their hand and say that they've reached out to Citibank CEO? Has anyone reached out to a senator or a congressman, if it comes to the U.S., about any type of regulation and how we can work together and open that dialogue? And unfortunately, I don't see that being the case in many areas. And so how do you expect anything but fear? And what comes from fear is going to be rejection. And that's exactly what banks are presenting. But if you go through SEC attorneys in the US, I have individuals who have passed through compliance departments at the highest level. And it's not difficult. You simply have to take the steps and the concrete measures to make compliance officers, as you said, that are old school, really understand what the new school is about and that we're not a threat. We're here to offer a new product and offer it the right way.
I think the problem is not because there are old school compliance departments in the banks, and there are many risks of money laundering even without blockchain, even without bitcoins or any other cryptocurrencies. This is political decision of banks, and we are opening bank accounts by ourselves. So we have compliance department, and of course we need to do precise KYC procedures. We need to check for all documents for the transfers, but we don't discriminate people or companies because they are related with crypto. So
I kind of disagree. I don't think the banks are in any way political. I think it's just a business decision for them. to accept certain clients or not to accept. And when you look at it, it's like cryptocurrency is very new field, and it's lots of work for them, compliance-wise. They have to figure out what are the risks and what are the problems, and they have to invest money and work hours to that stuff. And if they don't see the business opportunity, they won't invest, and they will not accept cryptocurrency companies as clients. So.
I think they see competition here. And
exactly. Yeah.
There is opportunity for profits, and we are using this opportunity now. We are opening bank accounts for crypto companies, for crypto exchanges, for crypto traders, arbitrage traders, and so on. But and we have our tools how we are checking transfers and how we are checking our customers, but banks just see competition here, and they don't want to grow that competition. That's my opinion why they are looking so hard to any bitcoins.
So even for a precious metal company, because everything can be used to launder money, everything can be used for tax evasion. You can buy a car to avoid. You can do everything. Banks look. So today, for instance, if you go to just recent example, DBS Singapore. So we went to them. We went to say, sorry, DBS Hong Kong. When we want to open an account, we say, sure, if we approve you, and they did approve us because we have a very strict AML process, KYC. They went through. They spoke with our compliance officer. They said, sure, we're convinced. We're going to open your account. We're going to charge you $5,000 for the pleasure of you doing business with us. And then we're going to charge you a couple of $100 transaction fee, and every time you wire in and out. So they make money. They can make money. At the end of the day, there's a way, and one of the reasons gold has been very popular since 2008, and crypto in the last same time, is that many people lost trust in the banks. They lost trust in the governments. They're looking for a safe way to secure their money. It's natural. People work hard for their money. They want a way to protect it. Now what happens is that if the system failing time after time, if people here remember what happened in 2013 in Cyprus, the government took over people's deposits, right? So you have money in the bank, but actually it's not yours. So people looking for other alternatives, and that's the problem with the banks.
But finally, so if you look, for example, today, so many companies, they're organizing their pitches that we are trying to disrupt this industry or that industry with blockchain. We are started to raise our funds via ICO, or several companies already raised, and they're organizing some fancy parties with many journalists that we just raised, for example, 20, 40, 100, 200 million. So let's celebrate it. But we are sitting in our office, and so many companies, after their successful ICO, they come into our office with one very simple, very stupid question: do you know some friendly banker who can open an account for us? Because when we are trying to convert something more than 50K, the most often answer for us, your current account just frozen for 30 days, and you have to found some new bank during the 30 days and after that we will send this money to other current accounts. And still, I cannot understand, because most conferences, most panels, they're about how to attract money, how to disrupt some industries. But if nobody able to run your business, not to convert 20, 30K for your own wallet and for your own personal expenses, if you are not scam project, so you have to, for example, your burn rate will be 1, 2K per month for your staff. How to convert such money, how to run your business without issues. And finally, after your answer, it seems like also that there is no issue and you are able to run your business. But who are these guys who are visiting my office every week and asking me, do you know some friendly bankers? Finally, my question to you, is it possible to run a business not for individual purposes, but for businesses? So there are about 25 crypto-friendly cards, so many players in different countries. But is it possible to run a business after ICO with this source of funds or not?
Well, I would say it's possible, but you have to do lots of compliance work. Like the bank has to know what your business is about, and if you are that legit guy or scam. Because for me, example, I see so many ICOs and they look so so shady to me. So it's very difficult for me to say if it's just some runaway scam or a real legit project. And the bank has the same problem. They have to know the business and they have to trust the entrepreneur to open the accounts. Because if it turns out to be problems for them, if it turns out to be scam or something, they can have lots and lots of compliance costs with that client. And so there's like a big risk for the banks accepting that customer.
And ultimately, I completely agree. It's transparency. At the end of the day, we are an alternative culture. People don't understand us. People will reject what they don't understand. You see it time and time and time again. And unfortunately, what a lot of us are looking at is trying to get the easy way out, or the workaround, or how quick we can get to market. And at the end of the day, if you look at these investment firms, these traditional banks, they don't get products to market quickly. They do it the right way. And I think we're confusing the right way with the quick way. And that's a concern that everyone should look at, because you're going to have regulation out of fear, and regulation out of fear is going to be slamming the door. And if that's what we want to continue to happen, then keep operating the way that we are and think that we're right. If not, hear the other side and try to comprehend what we can do to help. And in the US, for example, it's simply SEC compliance. It's not hard to go through it. It's expensive. Do I like doing it? No. No one does. But at the end of the day, you have to be transparent with the individual that you work with. No one's had a partnership here that's been successful when you lied to your partner consistently about what's going on. If you have a wife out there, if you lie to your wife about your bank account consistently, is she going to check your bank account? Probably. It's the exact same thing here.
I think, again, I agree with that. Coming from, again, an industry which is much more traditional, it's a 3,000 years track record, this is still the Wild West. And I think while doing this, while going into this era, as like I said, we need to be transparent, we need to accept that there are limitations. We cannot do whatever we want to do. There are limits, and then the rest will follow as the industry is getting more mature.
I think when regulation comes in, depending on jurisdiction. In Singapore, of course, MAS has come out to say that they already had that second consultation paper. They are working on the payment services regulation and all that. Once that comes in, that will give some clarity on how do you run a wallet, how do you convert crypto to fiat, on the other way around. What are the KYC, AML procedures need to be in place? What do you need to show the regulators if being asked? What can you prove that you've done your procedures properly? As high a standard as the normal procedures that are in place now. So once we have that clarity, I think it will be much easier for people to put in place, plan, budget for headcounts, and even blockchain or crypto-related companies will be able to allocate resources to do that. But because of this lack of clarity, a lot of people don't know how to plan. Therefore, the bigger players have the sources, they go OTC. I don't want to go into details how OTC works, but basically there is not enough transparency in that process. And if I were to look outside into those kind of transactions, then probably there's some compromise in terms of KYC, AML procedures there, right? I don't know. But if I were from running a traditional banking business, I will look at it. If I deal with you, and I don't know enough about your dealings post-crypto, and if you somehow relate or get yourself involved in money laundering or terrorism financing activities and all that, then I get implicated, I get penalized, and reputational risk, and yeah. So there's a web of, it's not just one company, but the entire industry could be affected as well. So I think it's a very, very complex issue here that we're dealing with. But within the crypto community, I think, as we just mentioned, we need to be self-aware that knowing that if we are running business on a long term, we know regulation will come in. Different jurisdictions are coming in with regulations. So if you know roughly what America, US, SEC is doing, so other countries will not make it very easy for you. So eventually it will converge. All these regulations will converge. So we should do our best to consult our own lawyers and see how we can be compliant within 6 months, 12 months. And from then on, if you are the person who is almost 100% compliant, you're the first to grab the market share. So I think I look at it positively that regulators are very encouraging. They want to encourage innovation. And on the other hand, you have regulated entities like banks. They are subject to very stringent requirements from the regulators. So they cannot make mistakes. So therefore, they have to be very careful. So I can understand why they are being not so friendly to a certain extent. But there are friendly banks. You go to Japan, there are banks who are willing to take you. In Korea, maybe Shinhan Bank can take you as well. But you need to pay. But it's only because now it's not there's no economies of scale. There's only a few banks who are willing to do this business. But eventually, it will become normalized. Then it will become any other new businesses. If you go back into 1994, how many people had problems starting their startup, and they had same problems with banking relationships too. So, but 20 years later, I think tech is cool, right?
I agree 100%, and my advice for all ITO companies is to take care compliance in the beginning, and to invest not only in advertising but also in compliance and in KYC. And we are a bank, but we are not money laundering machines. So of course we need to follow all the requirements. We don't want to risk our license. So the first thing, they should take care them compliance first, and then everything will be much more easy.
So regarding this point, it's very interesting situation. Why I participated recently with some other ICO-backed companies. Some companies already raised their money, and some just started. And newcomers, they're asking more mature guys, I see that you already solved your solution, your problem with friendly bank. Can you disclose for me with whom I have to contact? And nobody, everybody prefers to talk about crypto-friendly something, but when you will look inside this community, nobody wants even to advise for others or disclose how they solve the solution for themselves. And I'm really surprised each time, even for KYC, IML processes, everybody knows that if you already found some solution, you can suggest for others how they can proceed via the better way. But what do you think about it? Is it really problem of mentality or problem of trust inside this crypto community? Why nobody want to share their information, how they solve their...
I can tell you from our experience, just because again, we got one of the biggest, probably the biggest exchange in the world. We met the owners when we start doing our crypto project, and we asked them, can you help us, or can you refer us to a bank that will be tolerant? Because our banks, and we bank again with 5 or 6 banks, they don't want to touch crypto. So he said, yeah, you can go to this guy and talk to him, but in the account opening questionnaire, don't say you're doing crypto. But we do trading. Now, it was, for me, again, coming from a traditional industry, it was very, very, I felt like I'm, like I'm doing something wrong, because I was sitting with the banker, filling in the forms, and then signing it, and then like, you're doing crypto, right? Like, yes, we're doing crypto. No, it's like it should be on a table. So I think one of the reasons here, and again, experience we had with some of our crypto partners, is that it can be an initiative of of one group within the bank, something that cannot be fully disclosed or fully put on paper, and also because it's still, again, it's still the Wild West. So it's still, you can't really say that you're doing crypto. I mean, even us, from the beginning, we separated entities. So our main business is still trading in physical gold, but the crypto side is done from a separate entity for that reason, because we don't want even to mix the two aspects, because we go to the bank and say we're doing commodities, but you can't tell the bank exactly what you're doing unless with a, with a wink, only with a wink. And that's, I think, why people don't want to even spread their contacts, because it's kind of local initiatives or very isolated.
Are you able to introduce some other ICO beginners to your banker?
To the wink wink. I'm happy to do that. I'll talk to the banker tomorrow.
So if you are doing your ICO and you're really afraid who will open current account for you, you know right now whom you can ask about this. Anthony just mentioned regarding Japanese bank that it's easier right now to go to Japan and maybe to open current account there. Right now, if you will analyze currencies, which currencies using customers after conversion from crypto to fiat, about 40% will belong to USD. Yes, Japanese yen became second largest. Korean won also growing very fast. But what about reality? Because seems like it's easier to proceed with Japanese yen or even euro rather than to proceed with USD. But from other side, we know that it's very, very hard to change mindset and customer behavior of ordinary people. Why? What do you think? Future belongs to fiat reality without USD participation, or finally somebody have to solve this problem, this gap with American market, and to establish something like crypto-friendly bank there and to become like correspondent connector to others, or customers can live even without USD part?
Well, I think from what I've seen from a USD standpoint, I mean, as we see in the banking and the finance industry, every language that's spoken on a trading floor is English. There's a reason for that. The influence that the United States has on the future of this economy is widespread, and I think we need to consider, again, educating these individuals who are traditional, because these individuals don't want to accept change. Education is going to be the first step to them understanding we're not a threat. We want to be a complement to the economy. We don't want to take over the world. And unfortunately, when you see tens of thousands of dollars coming into a bank account in cash a day, it's going to look like money laundering, and it's going to look like something that is morally indefensible. And I think that's what we need to be careful of, is that we don't understand that action without any type of explanation has consequences. And I don't think we've acknowledged that to the extent that we need to. And we've seen the illegality in certain countries. And you're going to get the hammer dropped on you if we continue to operate in a way where we think we're just going to create a new economy. Because I just simply don't believe that the US will allow that to happen, at least from their side of things.
Is it possible to stay forever in Japanese yen or euro or any other currencies, or even in Singapore dollar, or we need?
If you believe these currencies, if you believe in these currencies, I think the thing with the yen, especially with the yen, is that it's easy to bank there. So that's some of where the exchanges are located, where it's easier to open a bank account. There's arbitrage with Korea. But as Zach said, at the end of the day, the US dollar is still the global currency. So at the end of the day, if you cannot offer solutions in US dollars, it will be, you will not be a fully efficient and advanced market, unfortunately. It's still the global
solution.
Sorry?
It will be half solution, I say.
Yeah. US dollar is still the, I mean, even for us, trading in precious metals done in US dollar. I mean, can we accept yen? Yes, we can. Can we accept euro, francs? Yes, we can. But then we need to exchange it, because still, the market is based in London, but it's all in US dollars. So at the end of the day, you need to be able to deal with US dollar. And you see some of the exchanges, where we're based in Hong Kong, some of the exchanges in Hong Kong, the biggest obstacles are to maintain US dollar bank accounts, right? So you get notice every Tuesday, oh, the corresponding bank just shut us down, or this bank. So euro is easier, especially because Europe extended to the, because East Europe countries. but you want to be an efficient market, you need to sort out the US dollar issue.
Do you want to add something?
Of course, US dollar and the fiat currencies are very important, but because we're in a blockchain conference, right, I just want to encourage everyone to think beyond fiat currency. The basic building block of commerce and trade is actually moving money along, right? So now we are always looking at moving US dollar equivalent from one country to another. That's called cross-border remittances and all that. So in the blockchain world, there is such a thing called cryptocurrency where you can move values from one country to another, probably without using US dollars. So I don't want to go into details into that, but you can move gold across the border.
Yep.
You can move other types of
But
cryptocurrency.
you need to pay your bills, and you need to pay for your business, and you know, at the end of the day, you need some type of actual, you know,
Yes,
old
yes.
school currency that
Yeah.
you can use.
So, I mean, from a purist point of view, if one day we're able to, like what, you know, original blockchain was created, Bitcoin was created, is to be able to pay a pizza using a Bitcoin. But unfortunately, Bitcoin has become too slow and too expensive to do payments. But there are other cryptocurrencies available that are able to facilitate transaction in seconds and at a fraction of a penny. So these are the certain type of cryptocurrency with a very firm foundation that they have built with the purpose of moving values across countries. And if we were to, as a blockchain community, try to look at what solutions we can build on top of this platform, and eventually one day we will be able to pay bills, utilities, pizza, Starbucks, whatever, using this ABC currency. And you can go to Jakarta, you can go to Singapore, you can go to Hong Kong, same franchise, using that cryptocurrency. And that will be the vision that I will have in the future. But we're far away from that. But there are already certain cryptocurrencies that is able to fulfill that promise of a fiat, basically a store of value and as well as transaction. And they are able to do it at a fraction of a penny, seconds. So we should explore on that part. But in the meantime, we just need to work with the banks and tell them, this is our business model. We are in the business of, for example, facilitating asset tokenization, blah, blah, blah. This is the only thing we do. You're welcome to come and check our books. There is no money laundering here. After a while, when they understand your business model, you just can't facilitate money laundering. So when they understand that, then this will be a strong use case for other types of asset tokenization business model, and they become more familiar, and then it will facilitate the next account opening. So I think as a community, we need to help each other. As you mentioned, there's not enough of sharing in the community. There are people definitely doing big trades, OTC and all that, but they won't tell you the source because I don't want to complete that sentence. But it's more of like once you find a way to convince your bankers, what are the information you tell them that lead them to have that confidence in you, you can share that with your other colleagues in the industry, and they will do the same. And with this, I think we create a very positive energy rather than a negative energy. So positively, we want to work with regulators as well as the banks, and I think in a short period of time, we'll be able to change this. So it really starts with all of the blockchain community to start doing that with that kind of mindset.
And move to gold in the meantime.
So at the end of this discussion, I just want to share my own experience with this issue. I think that still it's issue even with so many successful ICOs, etc. When we found this, when we met with these post-ICO companies and they started to ask us where to open an account, we started to meet with bankers, big bankers, I mean big banks, small banks, tech-advanced banks, not so tech-advanced, and all of them told, if we will summarize why they don't want to work with such clients, first of all, it's conflict of interest because they already have their own traditional business, and when you're trying to mix traditional business with low risk and new kind of business. They understand they are not against the, such companies, such clients, but they do not want to mix two different, extremely different type of clients on the same banking license, and all of them talking that you have to have separated banking license only for such kind of clients. Second one, you have to hire well-educated, well-tech advanced employees to work with such clients, because if your compliance officers do not understand what does it mean blockchain, ICO, crypto, she will always decline your customers and your transactions. Third one, you have to implement such technologies like digital KYC ML solutions like Basis ID from Singapore or any other companies. And fourth one, nobody wants to be transparent with regulators that they're doing this. So even such banks who are trying to work to open accounts for such customers, when regulator asking them what you are doing there, they are answering nothing. We are just experimenting. And even after that, we asked several banks across US, maybe we as investor could be able to buy some small bank in the US to clean up balance sheet, to convert their business model to work with crypto-related customers. Even after that, I received more than 20, about 22, 23 requests from small bankers. We are able to sell our bank, but when we went to regulator in the US, they told that it will be very, very hard to you to receive approval from our side to change business model of such bank. But finally, we found some state in the United States, and they advised us to apply for a new license for such clients. Hope in February, at the end of February, we will finalize our application to submit for banking license in the US to work with USD. So it's just my own experience, what we are trying to do. Do you want to add something at the end of our story?
Just one last note. The next time you have a chance to talk to a banker or maybe even a compliance officer, maybe you can just ask questions like, do you understand blockchain? It's a public blockchain. You can check the transactions on the public blockchain. Vis-a-vis a banknote, do you track the serial number? It's changed hands thousands of times. Are you still able to track that banknote who has gone to? Is it easier to check the banknote that is not locked and is transacted many, many hands, right? Compared to a blockchain that is all on the public blockchain for you to check. So which one is easier? So, I mean, if you understand blockchain, if you can identify that identity, practically it's very hard to do money laundering on a blockchain, public blockchain.
Well, I think it's a good point, but also I think we have to do vice versa as well and ask why from the institutions. Why aren't you accepting us? What do you need? I think too many times we're concerned with ourselves and the selfish attitude that most of us have, which is, I want mine, me, me, me. Unfortunately, banks don't operate very well with that mentality. And so ultimately, I think the larger discussion should be, why don't you accept ICOs at this point? What could we do to work in really a contributing factor to benefit them in the long term from a compliance standpoint? What documents can we add? What lawyers can we utilize from an SEC standpoint, if it is USD, to be able to clarify what we do and how we do it? Because ultimately, transparency is the issue. And that's what these banks have a problem with.